Today, folks, I'm going to explain how I got a $30,000 line of credit. I'm going to explain to you how you are going to go about getting your own credit, because coming from a self-employed person, the hoops and hurdles I had to jump through with banks to get this in the first place was insane. And now that we're in the midst of the pandemic, it feels almost the same as I'm constantly trying to renegotiate these rates. And then after I give you the tips and tricks and hoops and hurdles that I had to go through to save you the headache, I'm going to explain to you how I use this credit to actually make money. Now, I'm not a financial advisor. I don't believe credit is a good thing, but there's purposeful ways to use it in which you could put money in your pocket by leveraging their wealth. The same way people go and get mortgages from banks to buy properties, guys. So getting right into this, guys, how do we go about getting a line of credit from any bank? Because it's really the same application no matter where you go. So what I'm going to do first is break down for you what the bank is going to want from you, which primarily comes down to one. We're going to start at like the tippity tier of the list of things that you're going to have to do first, which is get some form of income. Now, being self-employed, this has been one of the most brutalest challenges ever, because typically people write down their expenses. When you work for yourself, you're writing off your gas, some of your home expenses, your food expenses, some of your travel expenses, but that kind of degrades your net income at the end of the year. As personally, I'm only claiming like $20,000 worth of income after my expenses are paid for, which is a smart way to not pay more tax. In the instance of trying to get credit, the bank's going to look at your net income because they don't care about what you're writing off, even though it's ironic because likely you're using that credit card as the tool to pay your expenses off. But they don't look at it that way, guys. They look, how much net income do you actually end up with at the end of the year? And that is primarily the first thing they're always going to ask you for. So if you have no net income, don't even bother wasting your time trying to get a line of credit from a bank, because it's no different than trying to get a mortgage. If you got some income going on, good for you. You got the first thing out of the way there, guys, and you really don't need to be making more than, I'm going to say, $20,000 a year, because that's what I'm making, and I had no problems getting these. But again, we're talking post-pandemic, because right now banks have their backs kind of tightened up and they're a little bit more worried about leveraging out capital. The second thing that you're going to want to pay attention to here, folks, and the second thing they always ask for, is your assets minus your liabilities. What do you have laying around in cash? Your emergency fund, PayPal account, whatever you got in cash. Second thing, what do you have in stocks, bonds? I mean, do you have any investment accounts in your RRSPs, TFSAs in the US, your 401ks, or your Roth IRAs? Finally, do you have a house? How much do you own of that property? These become like the trifecta factors of how much they're actually going to leverage you, because obviously if you own a home, you can pretty much get a line of credit leveraging like more than half the property if you wanted. But in this circumstance, for me particularly, I do not own a property, which is usually what they want you to have. If you have a property, it's so easy to get credit, guys. But if you don't, it becomes a little more challenging, because I self-manage my funds, which kind of degrades the value to the bank, even for them to want to give me credit based off my portfolio. So you got to keep that in mind as well, guys. If you have real estate, a lot easier. If you have stocks, not so easy. But you take the trifecta of all of your assets, which I'm hoping you have some, plus your income, which is the first place, remember, they're going to look at, and they're going to work out a formula. I don't know how they do this, because this is different from bank to bank, which leads me into the final thing. Once you've stacked up all of this paperwork, guys, go to more than one bank, because my first bank would not approve me of a line of credit, which was really frustrating. But I'm like, you know what? Just because one bank doesn't agree doesn't mean another bank's not going to agree. At which I ended up going to the Royal Bank, and after discussing with them, they were willing to leverage me $20,000 at 8.9%. And as soon as my foot was in the door with them, you'd be shocked at how many banks are like, oh, well, he's already got a line of credit. Yeah, we'll give him one too. Why not? So once you get your foot in the door, it's a lot easier. And don't think, guys, because you have a good credit score that you're going to have an easy time getting a line of credit. It really doesn't matter what your credit score is in this day and age, because my credit score is perfect. I've been using a credit card for a decade, phone bill, cars that I've paid off on loans, and it doesn't seem to affect how much they're actually willing to give me, because the Royal Bank willing to give me $20,000, Scotiabank only willing to give me $10,000, and that $10,000 was at 4.9%. So it's really odd how one bank is willing to give me more at a higher rate and another bank is willing to give me less, but at a much lower rate. Even right now, as I try and negotiate these guys, it's so challenging, because they want all the same paperwork to prove that I'm even capable of handling the same credit at a lower rate. There was a major risk of me renegotiating my interest rate, that if it comes back that I'm actually a higher risk than I was when I first got it, that there's a chance that that rate could even go up, or the amount they're willing to give me might even go down. So she says, you're taking on a pretty big assumed risk by even just approaching the bank and trying to renegotiate. So who really cares that, you've had a great credit for 10 years? Like, none of that seems to matter here. At the end of the day, guys, let's go away from now. You've got your paperwork paperwork figured out, you made a meeting, you sat down, you negotiated, they gave you something. What really matters by the end of this? Well, it primarily comes down to what you're going to be using your line of credit for. Now, personally for me, for my own personal expenses for my business, I use a cashback credit card. This is only has $1,000 on it. I usually have to top it up higher because my expenses are more than that, but I get about 1 to 2% cash back, which at the end of the year adds up to being $200 or $300. So my cashback credit card is for my expenses, and I make sure I never pay one interest payment on this ever, or it's just not worth getting the cashback rewards. So putting that aside, guys, what are you going to use a line of credit for? Problem with the line of credit, in my opinion, is anything above a 5% interest rate is almost just impossible to use over an extended period of time. And not to be rude, if you financially don't understand how to use debt to make money, you're probably using it to buy a car or assets that go down in value, which is something that I just refuse to do. So for me, if I can't get an interest rate below 5%, there's not a lot of assets that I can invest that money into that'll go up faster than that. They're very odd occurrences where I'd be willing to do so, which we're going to talk about. But that puts me in a circumstance where my Royal Bank credit, 20 grand at 8.9%, is basically unusable for me. I just leave it there until I can renegotiate, because once you get it, you got it. So let's talk about my $10,000 line of credit from Scotiabank at 4.9%. Now, this is where things get really interesting, because I've used it twice already within the last year. Invested in the stock market when things got really suppressed. I was buying really awesome real estate investment trusts that were paying much more than the interest rate was. So not only was I able to service that debt every month while putting money in my pocket, but that asset rebounded as the market recovered, and I was making way more than the interest rate of 4.9% over that year. I mean, it's already up over 10%, plus I collected like an 8 or 9% dividend yield over the last year. So that rate of return is almost 20% over a year against a 4.9% interest rate, which I paid off way faster than that year was even close to being out. So even still, if that levered out over the whole year and my rate of return was only 20% with the dividend, guys, and I had to pay that 4.9%, we'll just say 5% to make it easy, I still end up pocketing 15%. So you start seeing how this becomes very advantageous, at which I found a second opportunity to take full advantage of this, where I leveraged in my entire Scotia $10,000 line of credit into a stock many of you OG subscribers are aware of, called Alibaba. And I can even show you that position right here. This is 100% leverage from the bank, at which I'm currently sitting up 11% as of this moment, or roughly $1,000 in gains if I were to sell it right now. So I could pay back the credit, which I haven't made one interest payment on yet because I haven't held this position for a month, and I would have quickly made $1,000 minus the taxes, which luckily in Canada, you only pay capital gain tax on 50% of those profits. So $500, that's going to get taxed at my marginal income tax rate, and 50%, 100% tax-free, at which I can reinvest or do with as I please. So this is a very risky thing to do. I don't recommend the majority of people do it. I've been investing in the market for several years. I have an emergency fund to back this up, because honestly, I don't think a stock like Alibaba is personally going to go like 100% bankrupt. But even if it did, I am prepared for that situation, because I always believe in keeping an emergency fund. And, you know, instead of using that cash, why not leverage the bank's cash when it's deemed appropriate for my own circumstances, which might not be the same for you. But I pass the question off to you. Why do you want a line of credit, guys? How do you use credit? Let me know in the comments section below. Let me know the hoops and hurdles you had to go through to get credit from a bank, because like I said, guys, keep in mind, you got to show that net income. So get your tax documents together, get your assets minus your liabilities, and walk into that bank with that meeting ready to go, guys, and you won't have a problem getting a line of credit. But let me know, guys, did I miss anything in that comment section below? But stay cool, stay awesome, and I look forward to chatting to you tomorrow.